Back with you on the Market Day Report on a Monday. Thanks for joining us today. I appreciate that very much. I'm Arlen Bowling. Let's dive right into our grain trade, see what's going on. We had a weaker start to the day. Everything was weaker overnight, that's for sure. And then we kind of added to it on the opening bell. Right now we have March corn more back where it was overnight. We have the March at 3.58 1/4 per bushel. We're still down 4 1/4 cents now. The May contract down 4 1/4. New crop December down 3 1/2. We're trading at 3.85 3/4 right now per bushel. Meanwhile, on the soybean trade, that's the one that really got hammered this morning, and they're leaning on it even more right now. Look at this. March soybeans down 25 3/4 at 10.23 1/2 per bushel. That's 2 pennies off of our low of the day. And we have the May contract down 25 1/4 at 10.33 1/2. Let's go to the trading floor in Chicago and bring in Oliver Sloup of II Trader to find out what in the world is going on here. Oliver, it seems like traders are in a foul mood here to start out this Monday on the grain trade.
Yeah, very volatile open, and you're right, a lot of the weakness really started in the overnight session. We're seeing that roll over into the early morning trade with the sellers just stepping in. And I think with the pressure in the overnight trade in the early morning, you're seeing some producers take some action as well and kind of putting a floor underneath the market. So they're doing a little bit of selling, and that's adding to the pressure in the early morning hours. Now for the corn contract, we actually really like this support. 354 to 356 is the 100 and the 50-day moving average, as well as the key Fibonacci retracement level. So as long as the bulls can kind of maintain a price action above this 355 level, I think it bodes well going forward and sets up a potential series of another higher lows, which is going to be very important going forward. Ultimately, still need to get back above that 361 for bulls to sleep easy at night.
Oliver, I heard numerous reports this morning talking about a commitment of traders report that came out Friday, and it showed that those large commodity funds that had been holding net long positions really expanded that and really increased their holdings on the long side. Is that what's driving this today here?
Yeah, I think you're seeing is some liquidation from those funds that have had a long position, but I think the funds are probably setting up to add more long exposure going forward. Looking at the soybean contract, that's obviously the commodity or the grain that's taking the most heat here this morning, trading lower by 25 or so cents, give or take. But ultimately, I think this sets up as a buying opportunity if we can kind of stabilize here at the beginning or the first half of the week. Now, looking at the May soybean contract, we have rallied 13 out of the last 15 years from January 28th to March 4th with an average gain of about 50 cents. So we are a little bit under pressure as of now, but I suspect some of that premium from South America will seep back into the market over the coming weeks. And then you have the premium from the United States planting decisions that might seep in as well.
Oliver, looking at a March soybean chart, just kind of roughly eyeballing it here, it looks like we're getting down there around that 50% retracement level there on the chart.
Yeah, that came in right at about 10.35 from the June highs to the August lows. We obviously broke down below that. We saw some accelerated selling pressure come in. So the next little support pocket that we're looking at really doesn't come in until 10.09 to 10.12. That's going to be the key pocket to keep an eye on. But again, if we can get a little bit better price action through the morning and into the afternoon back above that 10.30, 10.35 level, I think that sets up the rest of the week fairly well, despite being under pressure to start.
So we had weakness in the wheat trade this morning as well. Let's take a look here at Chicago wheat and get everybody updated. We have March wheat now down 5 at 415 1/2 per bushel. Kansas City March has also been under pressure. We're down 6 1/4 at 428. And now looking at Minneapolis spring wheat trade this morning, the March contract down 7. We're trading at 553 even per bushel, only 2 ticks from our low of the day. Is the wheat just following along with the pressure in the corn market today?
Yeah, I think soy is probably the main driver. You're seeing it spill over into the corn and into the wheat. But also the U.S. dollar has been very volatile. We were trading above 101 early this morning. We're back down towards 100.50. So the volatility of the currencies, the volatility in the soy complex, definitely going to keep traders and producers on their toes in the corn and wheat markets.
All right, very good information. I appreciate that, Oliver. I'll bring you back here in a moment. We'll talk a little livestock trade as well. We're talking with Oliver Sloup of II Trader. Don't go anywhere. We'll be right back. And we're back with you. We're talking with Oliver Sloup of II Trader in Chicago right now. I want to take a peek, Oliver, if you don't mind, at the cotton market, because that has had quite a rally here recently, and I wanted to get everybody updated on the current cotton price too. It had a turnaround here. It was higher in the early going, and then it turned around within about a half hour of the opening. The March cotton currently quoted at 74.61 per pound. That's down 24 points right now. The May down 21. And even July is down 17 points. So I just wanted to get everybody updated that that cotton market kind of turning around this morning. All right, Oliver, I want to talk with you about this livestock trade. Let's look at our live cattle futures here and see what's going on. Big sell-off in the cattle trade today. It wasn't totally unexpected after the cattle on feed report that came out on Friday with a very huge placement number, almost 10 points above the average trade guess. February live cattle currently down $1.90 now at 116.42 per hundredweight. April down 224 at 115.08. That is about, roughly 65 cents or so off of our high of the day, and we're about that much off of our low as well, about a half a dollar off the low. June down 233 at 104.65 per hundredweight. Meanwhile, on the feeder cattle side, here we have the March contract down 323. They're adding to the losses now. 124.22 is our last trade per hundredweight. April down 323. Last trade there, 123.52. So first of all, let's focus on this cattle trade. How bad can this get?
Well, I'm actually kind of surprised that it's holding up as well as possible. I would have thought we might see a little bit more pressure at the open, but really stabilizing quite well. I'd like to see a little bit more positive price action as we head towards the afternoon hour to kind of see a confirmation of stabilization. If we aren't able to get that and see another wave of selling come into the market, it probably won't bode too well for the bulls in the near-term picture. But on a longer-term picture, I do like this market, and I think this pullback really presents a decent opportunity to start stepping back in on the long side.
So for something better to talk about, let's take a look at the lean hog trade today. Now here on the lean hog futures, we have the February up 60 cents. We're trading at 67.50 right now. We're within about 15 cents of our high of the day. Check that, 67.48 now. April now 28 higher at 68.58. Now the deferred's under a little pressure though if you get out into the summer months, but those are already trading at a pretty steep premium to the nearbys anyway, right?
Yeah, those are seeing just a slight pressure. We're focusing on the April contract. That's where the majority of the volume's going to be at here for the near term, and it's really holding up very well. We saw a lot of pressure come into the market last week on Thursday, but really held very well on Friday, which set us up in a good spot to start this week's trading session. Now, as long as we can kind of hold some of these support levels, 66 is going to be a big one to keep an eye on. As long as we can maintain price action above that throughout the week, I still think we could head towards that 72 level a lot sooner rather than later.
And that was a really wild week on the charts last week on the lean hogs, where we took out the highs and then reversed out on an outside down day, and then we took out those lows and reversed out and went higher again. It actually almost ended up about where it started on the week, but that was a wild ride last week. Do you see more of the same this week or not?
Yeah, I suspect we probably see things calm down a little bit. We often refer to that kind of price action as the shakeout, fake out, kind of shake both the bulls and the bears out, or the weak holders of those positions, and then kind of reestablish some footing. And I think that's what we're seeing here to start this week of trade. And again, I think the chart on a longer term perspective looks fairly friendly here.
Oliver, thanks for the insight into the markets. Appreciate that very much. Oliver Sloup of II Trader in Chicago. So there you have it, direct from the trading floor.
Direct from the floor. What could turn out to be a very interesting close to the day as well. We're going to have to keep watching that.
Especially with that big cattle report tomorrow, too.
That's right. We'll have to see what happens as people maybe get positioned.